Hello traders, this is Blake Morrow with Forex Analytics, and you're watching the week ahead video for May 27, 2018. First thing, just as a friendly reminder, if you are not in North America, here in the United States, we're actually observing Memorial Day holiday, and therefore the U.S. equity markets are going to be closed on Monday. So if you notice that the markets are a little slower open in the FX on Sunday night, and you know, kind of trudges around, that's probably because you know, there's a lot of traders that are out due to this long holiday weekend. So just be aware of that as you start trading on Sunday. Things might be a little slow. All right, second of all, make sure you sign up for Forex Analytics. Try it out. It's only $1 for 10 days. Once you click on the button here, it says sign up today. It'll ask you for some real quick information to try it out. Just $1, 10 days. That's it. And then once you're signed in, you'll actually be looking at a different page than I'm about ready to show you. This is the new version of Forex Analytics. It's in beta, and it's going to be released here in the next week and a half or so. We're just tweaking a few last minute items, but what you're going to notice on the new version of Forex Analytics is we put everything right on one page, which makes it so much easier to do analysis, read analysis in the markets. And you know, we have our live stream through Rand Squawk and our own team right here. We have the calendar. You can see all the alerts, the update history, Twitter, links that might be valuable for you guys to read. All really neat things, but all right at right at your fingertips. It's all in one page. So let's get started with what's happening next week. First of all, next week, as I mentioned, it is a shortened week, at least here in the United States, but it's also non-farm payroll week. So there is a bank holiday, you know, obviously for the U.S. There also is for the U.K. And I think the UK calls their holiday spring bank holiday. So anyway, that's observed on Monday as well. So things might really be slow. But we do have, you know, some I want to say Fed speak, but it's not only Fed speak. We have some Fed governors that are speaking next week. But Kuroda speaks on Tuesday. We have the new RBNZ governor. Or he is speaking on Tuesday evening, Wednesday morning in New Zealand. We also have Swiss National Bank, Jordan is speaking on Wednesday. And then the important events that are happening this week, like I said, non-farm payroll on Friday. That means ADP. ADP non-farm will be on, or the private sector non-farm payroll will be on Wednesday. We also have the Bank of Canada rate decision that happens on Wednesday, and even though the market is not expecting the Bank of Canada to make a move on rates, remember one of the things that people are watching with the Bank of Canada, and I think I had it on the Canadian here, yeah, I did. One of the things that people are watching about the Bank of Canada is how much, or does the Bank of Canada reference NAFTA and inflation, and if it sounds like they're going to turn hawkish once there's a NAFTA deal said and done, that's something that, you know, I really want to buy the Canadian dollar, and I know I've mentioned this in the past, but just to reiterate, the guys that I trade with, they all believe that, you know, once a NAFTA deal gets done, it allows the Bank of Canada to become more hawkish and actually start raising rates. But their hands are tied right now while waiting for the NAFTA negotiations to complete. You know, if you think about it, though, we've been waiting for these NAFTA negotiations to show some you know, real progress and even some sort of quote unquote light deal to be done for quite some time, and we've missed a lot of deadlines. But you know, as we approach the end of the month, it's getting really important because NAFTA needs to get done, or the question is, do the tariffs start are tariffs imposed on countries like Canada and Mexico because we have not got a NAFTA deal done. With that being said, the Canadian is still a very, you can see how tricky it is to trade it right now. This is a weekly chart, and you can see this triangle. Okay, you can see the triangle here, and we're nearing the upper end of the triangle, which comes in around 130.50 or so. That's going to be that upper trend line. It's important because if we break above, whatever these highs here, I believe it's 131.30. Once we break above those highs, then it becomes very bullish the dollar Canadian, which is very bearish the Canadian dollar. So, if the Bank of Canada also maybe is a little worried about incoming economic data, maybe that really provokes the dollar Canadian to rally and the Canadian dollar to sell off, knowing that the NAFTA deal continues to be just drugged through the mud, if you will. So the Canadian's going to be in focus on Wednesday, so be really aware of that, especially as we approach the end of the month. I think it's going to be a very, very, very volatile pair, and you can see how challenging it is to trade, and because of the very tight trading range just over the last few months, and how things are starting to tighten. We have this slight upward channel here between 124 and 132. Really, a break above 131.30, 131.50, 132, and the dollar Canadian can really take off. And that you have to be aware of that, just because it's not just the Canadian dollar. Look at the other dollar pairs. Okay, the euro dollar, for example, we closed below the 38% retracement this week. I thought we were going to hold. Frankly, I thought that the euro dollar was going to hold. I played the euro to the long side at 117. I think I bought it at 117.19. I had to sell it on Friday for a loss because I knew we were going to close, or I felt like we were going to close below the 38% retracement, which we did. We closed at like 116.50, and we closed on our lows of the week. That's bearish. That's bullish the dollar, very bearish the euro. And if you look at the cable, let me take you over to the cable really quick. We also closed below our 38% retracement in the cable. This is we don't have it marked up here. Let me see if I can go. I'm going to go to because I didn't do the analysis this weekend on the cable. So let me go ahead and take a look right here. You see from the post-Brexit low to the high, okay, which we still have a double top. We closed below. We closed below the 38% retracement at 133.40. We closed below the 161% extension of this last move higher. You can see the low to high, okay, 161% extension. And we have that double top that actually points us to 131, 130, 130.80, the bottom of this little blue line right here. You see that's the double top extension. So the pound has a lot more downside in it, and so it's not, like I said, it's not just the euro. And if you look at the Aussie and the Kiwi, they also here's the Aussie. I mean, we tried to spike up to 78 cents. We closed, or 76 cents, excuse me. We closed and left a pin bar there on the weekly chart. That looks like it could still see a lot of downside, maybe even towards 74, 72 cents. You take a look at the Kiwi. Kiwi looks dangerous. Here, let's go this way. Here's the Kiwi. We're sitting on, pretty key support zone right through here. You can see all this support right through here. That comes in around 68 cents, drop below 68 cents, and there's a lot of open air down there in the Kiwi. The dollar, like I said, it closed on a strong note. It closed, the dollar index, I guess I should also point this out really fast. Let's get over to the Dixie. All right, here's the dollar index. And let's go over to the weekly chart. Let me show you the dollar index here. So we closed at 94 1/4, which is the 38% retracement. I did expect us to reverse from here. You can see that's why I had it highlighted in this red line from a couple of days ago. But we're here, and how about if we don't? How about if we break higher? Yeah, the RSI is overbought. Yeah, it's divergent, but can the dollar index break higher towards 95, towards these spike highs here, maybe even towards 96, which is the 50% retracement? And let's imagine the RSI breaks out and looks like that, you know, breaks higher. That's entirely possible. Actually, let me fix this here. Okay. Yeah, I mean, let's imagine the RSI starts to break out again. That could happen and take us even higher, even into more overbought situation in the dollar index. So to write off the dollar at this moment in time, at least against some of these major European currencies, doesn't make any sense. Now, there is a currency pair that is bearish if you're looking at dollars. Actually, there's a couple that are showing some signs of weakness. So if you look at, let's take a look at the Swissy first of all. Here's the dollar Swiss, and I want to show you with the dollar Swiss what the close look like. Let's go over to the daily chart really fast. Look at the daily candle in the dollar Swiss. That was a bearish close. Okay, so if you think about the Swiss franc as being bought, that's a signal of risk off, isn't it? Usually, it is. Usually, if people are buying Swiss francs and selling dollars, it's either the dollar's really weak, which obviously it's not. I just showed you against the euro and the pound and the Aussie and the Kiwi. But the Swiss franc is outperforming, so that means the euro Swiss is falling. That means there's some risk aversion out there. Or is it more of what's happening in the bond market, which I'll talk about here in 1 second. But look at the dollar yen. This is the dollar yen coming out of an ascending wedge. All right. Now, I'm bearish the dollar yen. I've got a pattern in play going in the dollar yen. Okay. I actually personally am short the dollar yen as well. You can see the dollar yen. We put a pattern in play earlier this week when it broke down through the ascending wedge at 110, and then also Andre from our team that does the harmonic patterns, he's been short since or bearish since 111 and change, right? So we're looking for the dollar yen to go lower. All right, we're looking for the dollar yen to go lower, but why is that? And why could the dollar yen go lower than it currently is? And by the way, we are at a 38% retracement. We're getting close to the 38% retracement in the dollar yen. And frankly, let's remove that real quick. We drop below that 38% retracement, which is the 108.80 level. The 618, and these levels could really be tested. That comes through around the 108 level. Okay, there's a 50% retracement right here at 108, and then below that is 107.21. So those levels I think could really be hit. Now you should take a look at the yen pairs, not just the dollar yen. Let's take a look at I got to show you just a couple really fast. Here's the euro yen. Okay, there's the euro yen, came out of an ascending wedge. We broke through a lot of support through here. This is a bear flag formation. If you can't see it in this particular chart, it's a bear flag formation that points us down, below 127. Probably more like 125-ish if this bear flag is playing. Look at the pound yen. Same situation. A, B, C, D take us down to 142, 143. Okay, bear flag formation, bearish, broke through this, ascending trend line. I think you can see it on the weekly chart. Ascending trend line broke that. Looks pretty ugly, right? Pound yen. Look at the Kiwi yen. This is an interesting chart right here. Look at this massive amount of support that's on the daily chart. You can see support, support, support. We're sitting on it. Support. The Kiwi yen, we cracked this 75.50. Look at all this downside here. A lot of it, right? And I believe a lot of this has to do with the bond market. And I know I've focused a lot on the bond market the last couple of weeks of these week ahead videos. The reason why is because the bond market is showing signs of reversal. Let's take a look at the bond market really quick. Here's the 10-year. All right, and we've been I have to say our analysis has been very accurate in the bond market the last few weeks. We are looking for us to bounce at the bottom of this descending wedge. It came back up. Dale Pinkert said he thinks that we're going to make one more push lower, and I said, hey, that makes sense because we'd hit the bottom of the ascending wedge before reversing. descending wedge, excuse me, and we did, and then we reversed. Now we closed above the downtrend line, which means that the ascending wedge is breaking, which is my favorite reversal pattern, is a descending or an ascending wedge. This happens to be a descending wedge, which is a bullish reversal, which if you think about where it could go from here, you know, the risk, in my opinion, is up above 121. And if you just look at it from a Fibonacci standpoint, the 38% retracement takes us to 122. So if bonds rally like that and yields drop, well, the dollar yen is going to be under pressure. The dollar yen would naturally be under pressure because this is probably the pair most sensitive to yields. The dollar Swiss could quite possibly be pressured. Okay, but would it stop? Would that dollar weakness be enough to stop the euro from going down, the pound from going down, the Aussie or the Kiwi? Or is it just the euro yen, pound yen, Aussie yen, New Zealand yen, Swiss yen, you know, every other yen pair starts breaking down? That's the question that we'll be asking if bonds continue to rally. And that's something that I believe you should be watching this next week. Now, before this next week, matter of fact, as soon as you're done watching this video, click on the like button and also subscribe to our channel if you get a chance. If you really like this video and you think it's going to be helpful going into next week, please hit the like button. And also, if you hit that little bell icon next to the like button, that will alert you when new videos are uploaded on our YouTube channel. So make sure you do all that. All right, guys and gals, my name is Blake Morrow with Forex Analytics. I hope you have a great trading week next week. Thanks for listening in.